Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at the charts, like the chart behind me, which is Rezolve AI PLC, ticker symbol RZLV, which was requested. If I do pull it up here on my phone, this is from Sweet Nectar of the God, who gave a super chat yesterday, so thank you very much for that. That is why I'm covering this. So if you do want me to go over a ticker, want to make sure that I do it, give a super chat, and I'd be happy to cover it. But yeah, I did want to talk about this because I think that it's come to an interesting level. It does look like, as you might be able to tell, that is broken out a little bit. But I also think it's come to a level where it's getting rejected. And so on Friday, January 9th, Rezolve hit a high of $3.99, so just below 4, kind of a key level, being a psychological whole dollar number, and then closed below at $3.68. In a minute, we'll take a look over at the max pain, see if that was $4, maybe $3.50, and we can evaluate, did it close above or below? And that could be a sign of whether or not this has topped. But looking at this here, you can see that purple line there. That is the 100-day simple moving average, and that's currently at 415, so just above the high from Friday. So yeah, I mean, it looks to me like it's getting rejected, but also it looks to me like it's broken out of some of those key moving averages. In light blue here, we have the 20-day SMA, which going back to October 7th, broke below it and then have resided below it, getting an attempt to break above it here on November 20th, got rejected, hit the level. Let's see, that was at 373 on November 20th was the 20-day moving average. The high was 373. So perfectly tested it, got rejected. And then over here got kind of a fake out break above with a gap up. The very next day, a gap up again, but then closed below that 20-day SMA. More, teasing us with breaking outs over here, but now it looks like we finally done it. And not only have we broken above that 20-day SMA, the red line, that's actually the 200-day SMA, that is currently at 320 and price is above. So I think that looks great. And then the blue one, that's one I pay a little bit more attention to. That is the 50-day SMA, and that is currently at 309. So, we got rejected from just below 4. And looks like 3 is also a pretty important level. And we do have some, highs around here, around 320, maybe coming back down to around 3. Consolidation highs here, and where we were consolidating below, kind of topped out around 320, could be acting as support if we do pull back. And that does correspond with the moving averages here. So that 200-day, like I said, is at 320, and the 50-day is at 309. So very interesting there. And then also let's evaluate this looking at the RSI and the volume. We do have lower highs over here. That corresponded with lower highs in the RSI. So there was no bearish divergence there, but it clearly didn't seem to really have that much of a move here, corresponding with a lot of volume. So with this amount of volume over here, you see a big upside move from the lows over here from that 20-day SMA. It actually went up around 180% on this much volume. Single candle per day, let's just evaluate that. It was, right where the cursor is. And then over here, volume's really breaking out, but we're not seeing the result from all of this volume. You'd expect with this much volume, that price would be higher than the highs over here, and we're not seeing that. So that is where I would say the bearish divergence comes in, not with the relative strength, but actually with that volume. And what I mean by bearish divergence is on the top side, you have lower highs, and I've apparently gone over this in the past. I didn't realize that. I thought I've never looked at it before. And so with that being said, let's delete some of the drawings. This one did not play out, did come down, but then did not go higher as I thought it might. And let's see, or actually maybe if did not happen. And that was to really kind of suggest that there's this inverse head and shoulder pattern playing out, which would be a bullish pattern. You have the left shoulder over here, head here, and then right shoulder, but that right shoulder can come down a lot more. It can come down as low as, but no lower than the head. Otherwise, you'd have like kind of a shoulder above your head. That doesn't make sense. And so what we're seeing now is, this right shoulder's potentially over here. And I think that moving forward into the new year, I think this looks really good. And also with that Fibonacci retracement that I have drawn up there, that does make me think that we've bottomed, because we have done a retracement. Let's actually make sure these levels are exactly right. So I'm just going to pull up the coordinates for that Fibonacci retracement. We have the low over here at 107 on April 9th. The low is 107. So that looks good to me. And then let's pull that back up, and we can see the high was hit on September 16th, and that was at 845. Those levels are great. They're lined up. And so what we have is a retracement to that 618, which looks like it's around 236. Hopefully you can see the number right there. That's the 618. Very nice retracement. Could come down lower though to the 786 at 167.67. Who knows? But maybe not. And I don't really think so. I think that the 618 is probably that level, because as I was talking about, it's reclaimed a lot of these moving averages. And if there is a pullback and retest to around 320 or 3, I think that could be acting as support before, this right shoulder plays out, which would mean from current price, if we did go up to that neckline, that's about 153% move to the upside. But maybe we go even lower before going up to that level. Let's say we go back to the 20-day SMA, and what's that number at? That's at 283. So let's say we go a little bit below $3 and then go up. That's like 222% right there. It looks like 222.69%. So maybe that's a good luck charm, a good omen there. But yeah, I think that this looks like it's going to the upside. I just think that there's going to be a little bit of a correction. And let's actually get a measurement of that correction from current price. I think this could be coming down 15%, if not 25%. So just be prepared for that downside. Have a plan if that does happen. Maybe also have a plan if it doesn't happen. Maybe I'm wrong. Who knows? But with that being said, let's look over at some options data. Maybe this gives us some insight into what whales are doing, what big money is doing, or just how sentiment is changing with the net call and put premium over here. So what we have in yellow is the net call premium, or sorry, what we have in yellow is the stock price. And so that did come down on Friday. And actually, if we do look over here for the day, came down by 0.81%, so nearly 1%. And but then it did bounce a little bit in the after hours. It looks like closed at, what did I say, 368, and in the after hours on Friday it went up to 384 to close the after hour session. But yeah, generally stock price coming down, not so great. We also see net put premium, that's flat. So that doesn't really say anything too much on the bearish side, but what we do see in green is the net call premium coming down, ending the day down by $54,000, whereas net put premium down by $5,000. So relatively more so on the net call premium coming down, that suggests selling, and so that is going to be more bearish. However, it's only like in total net contract premium traded today, or on Friday I should say, $59,000. That's nothing. So I wouldn't think too much about that. Pretty muted. But actually, if we do go back over the past 2 days, I think on Thursday there was some exciting stuff going on with this. Yeah, look at that drawdown in the net call premium on Friday. Basically flat compared to what we saw on Thursday. And that was up by $649,000. So that looks really good. As far as net call premium going up, we also see the stock price going up with it, but that could suggest that that net call premium is going up because of chasers. But we do see big jumps in the net call premium. That could be like a whale, unusual whale activity, putting some money in on this. So let's actually go back to the 1 day, but then just rewind to Thursday the 8th, and we could look at this time to dive into that to see if that's something of interest. So that was January 8th at around a time of 1:36. So we can go over here, and rather than do an AMC, I am going to type in RZLV. to pull that up. And so on the 8th, with a premium minimum of $100,000, we can see that, what did I say, 11, or I said, yeah, what time did I say was that big jump here? That was around 136. Okay, so let's look back over here, 136, right around here. 13, that's gonna be 1. 38, and let's see, premium of $235,000. That seems like it's more bullish, because looking at that overview, net call premium is going up. That does suggest bullish, but that doesn't necessarily mean bullish. We do see that the size is in purple, and that, I believe, it means that the volume exceeds the open interest, and that volume, that size, is 11.7 thousand contracts, again, total valued at $238,000. That is, however, for the $5 strike next Friday, January 16th, and so that seems like it's pretty risky out of the money calls. And we do see that from Thursday into Friday, we saw an open interest increase of 25.5 thousand. So the open interest was 6.4 thousand. Hopefully Ed's not blocking that. Yeah, just in front of his face there. 6.4 thousand on Thursday, but then based on the volume of 30.9 thousand contracts traded, we saw open interest go up from 6.4 thousand to 32,000, which is an increase of 25.5 thousand contracts. So that's a bullish bet, deep out of the money. So maybe there's not going to be a pullback, or at least this contract is suggesting, this order is suggesting that somebody is putting about $500,000 betting that the stock price is going to continue to go up, not stopping at 3 or 4, but getting all the way up to 5 by next Friday. Maybe it happens, maybe it doesn't. I have no idea. So you'll have to let me know in the comments, in the chat, if you want me to follow up on this one. But coming back to the overview over here, I did want to pull this up on the 30-day because I actually don't really think this looks that great. To me, this looks like this is chasing the stock price going up in yellow there with the net call premium, but maybe also it's because of the breakout that we've seen, the breakout above those moving averages. This person, or this institute, whatever, is betting on this going higher. So not stopping at that 100-day moving average at 415, but maybe getting up to 5. And where is 5 on the chart? We do see the 236 here around 519. And I can draw a level going across, kind of corresponding with the lows over here. That's around $5, $4.94. And we can actually look at the closing price on September 30th. That was at $4.98. So I'm just going to move this line over, and I'm going to lock it into place and adjust it to $4.98, because that was the close, as I had mentioned, on September 30th. So maybe prices going up there, and maybe we start to see this inverse head and shoulder, right shoulder play out, get up to that neckline, which would be more than doubling current price. So a very interesting stock looking at it like that. But before I end this, let's look over at the max pains. I'm just going to zoom in here so we can see it a little bit better. And so with the expiration from yesterday, January 9th, max pain was 250, closed notably above it, closing at 368, but then in after hours, again, mentioning that it closed that session at 384. We can see over here in the historic max pain that the max pain in green with red dots coming down, gray is the stock price, and that's well above. And so what happened the last time we saw something like this? We saw the stock price gamma ramp up as the max pain tried to catch up to it, and so that could be happening again. But if we look at the max pain for Friday, January 16th, when those contracts expire, the $5 strike contracts, max pain is $3, and it is feasible to think that a price around 4 or around 368 could be pulling back to 3 by next Friday, especially with the following max pain on the 23rd being 250. Maybe that's going to serve as a little magnet pulling the price down, but maybe price serves as a magnet pulling the max pain up, just like what happened over here. And the price closed here on September 15th, it looks like, at 772 and max pain was $5. So maybe we really start to see this ramp up. Maybe we're about to see a gamma squeeze over the course of the next week, and maybe it plays out into the following week as well. But these things don't tend to last forever. So if it is squeezing now, do take caution, do take profits. If it's getting up to 5, or at least trim a little bit just to manage that risk. I think risk management is a really important factor. Not everybody does it. But with all that being said, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more clips like this from gameplay streams. But I'm going to get back to it. Thanks a lot for watching. Have a great weekend, guys. See you later.